Good evening, morning, night, whatever you're watching. Welcome to another Elliott Waves on Cryptos. We are here yet again for another Thursday. And today, following the recent vote from the Quora Iron Cycle team, community, it's very obvious that SHIBA has won the weekly vote. Obviously, as always, I tend to do the BTC charts first, and then we're going to go into SHIBA. A lot of analysts, even online, they go and laugh, making statements that people trying to Elliott wave Shiba Inu. Oh my God. Thinking that Elliott waves cannot really help with Shiba Inu, sort of projections to the upside or to the downside, or see what we actually are expecting. And they are fully 100% wrong. Why? Because I'll tell you why. This is why Elliott waves can do magic, because it can be subjective. Yes, no disagreement there, but subjectivity is actually its strength, especially when you know how to count. So, do not listen to all those people on Twitter because they do not know how to count and they do not know how to single click the log charts. Because one would argue, what is the Fibonacci level for these crazy exponential parabolic moves? Well, click log and you're going to find the same exactly Fibonacci extensions and ratios as you find in a standard chart. Anyway, long story short, and we're going to have a quick look on BTC and then on SHIBA. Okay, this might be like a bit of a long 15-20 minute video. I will try to be as simple as I can and as understandable as I can. And also, as you well know, I'm more than happy to take questions on YouTube. Just leave them under the comment section. I will get back to you when I can. Don't forget that I'm not bull or bear. I'm here to help you analyze the markets. None of this is supposed to be giving you information that you go and trade off. Okay? I mean, you do whatever you want with it, but none of this is investment advice. Okay? It's fairly educational. As you will see, I always try to explain the wave counts and the narrative behind the thinking and the probabilities of where we could be heading. On top of that, do not forget that I have an amazing Telegram channel where I post several updates on a daily basis on BTC, Ethereum, and other altcoins. Some behavioral whale analysis there is going on as well. Some trading ideas and other activities. You can also participate in the group chats with the rest of the traders. If you are interested in joining, you can find my information in the about section. I'm more than happy to give you a trial for a week's test drive. So without further ado, now I think it's time we do go on the charts and see where we are in the cycle as well, because I've seen a lot of counts coming from people that they have no idea about Elliott waves. Suddenly they're trying to market something new, but unfortunately Elliott waves or any sort of technical analysis are prone to to marketeers. So I hope that my analysis will clear a few things out, so that you can at least join one school of thoughts rather than the other. Let's go to the charts and let's see what I'm expecting on BTC and on SHIBA. Okay, guys, I want to start off with BTC. I always recently actually decided not to have like a preferable scenario here, because I'm still 50-50 and because most of you go and shoot the messenger. So take it as you wish, but I'm 50-50 here still, and I'm more leaning towards the scenario that this is going to be a form. Okay, when this is going to stop being the case is once we have a confirmation and a confirmed break above the previous high. And you might ask, why am I bearish? I'm not bearish, guys. I'm supporting a scenario more than the other because we have not got the confirmation that we need. And what is a confirmation? Well, it's a valid breakout above the previous high, okay, for at least 2 days, let's say. Okay, for now we haven't seen that. Okay, let me go a little bit further out and show you my count in the long term and why. Wave 1 and 2, 3 and 4, and expecting 5, regardless of whether we're going to get 4 or not. Well, 5 might have already happened, by the way, but we're going to get to that in a minute. Why 1, 2, 3, 4, and 5, and why not? Well, I had 1, 2, 3, 4, and extended 5 here, or 1, 2, 3, 4, and 3, and then 4 and 5. All of this does not make sense. Okay, I will tell you why. There is many reasons, but the first thing you have to do when you do Elliott wave counting, you need to add volumes. Okay, when you see increased volumes, that's a wave 3. Okay, when you see deteriorating volumes, for example here, this is a wave 5, but these volumes have to be higher than the wave 1 volumes. Okay, so if you think of a wave, the wave volumes should go something like that. Okay, and this is going to be 1, 2, 3, 4, and 5. Obviously, you're going to see prices moving higher here, right? But the volume is going to decrease. It's currently what we see. You see that? This is the usual combination of, and the right combination of price with volume. Volume, guys, is what moves price. Most of you think that, okay, the best indicator is price, but price cannot move without volumes. Okay, so volume precedes price. Volume moves because of volumes. If there is no buyer or seller, price will not move. So you all got to understand that volume is very important. Now, the reason I'm not particularly interested in looking at this as a 3 and then the 4 and the 5, and this is 1 and 2, is very obvious. First of all, and of course I don't have the right chart here, but if we go back to 2010, the volumes for this particular move do not look like a volume for 1. Okay, this is a wave 4 volume, because the volumes that we have going up at this level, they are increasing. They are big volumes. They are volumes that belong to a wave 3. Okay, that's why I have my 1 here. On the different note, the second thing that you have to use with the waves is Fibonacci's. Okay, so one way is Fibonacci's, the other one is just to use your tool here. You know, you're going to see that, you know, if this is like a wave 1 from all the way to the beginning, let's say 1 and 2, right? I mean, I will put my 2 here. This is just a spike. Let's start. We literally started from 0, so we might as well just go down to 0, right? So look at this. Okay, this is on 1 and 2. Okay, if this is our 1 and 2, and then hold on, we might be better off taking the log off in this particular case. You see that we are kinda extending quite a bit in wave 3. Okay, 4 might be even, actually might even the 11 might do. Okay, the 11 do, the 11 do. The next one above 11, I think it's 17. You might wonder, how do I figure out these numbers? It's a simple calculations, guys. You just keep multiplying the levels with one another, and you're gonna get to these results. Okay, just to give you a quick example, 0.618 times 0.618 is this. Hold on, 0.618 times 0.618. You get 38. Then if you multiply that, you know, again with this 618, you get, you know, the one lower. Now the trick is this: what you're going to do with a division, that's a division. So what if you divide that again? You see, divided by 0.618. Divide that by 0.618. 8. There. We're gonna. I think we got it wrong. Well, hold on. Let's do it one more time. Okay. divide by 0.618. You just keep doing that. Keep doing that. And you're going to get to a level where this is a Fibonacci level. Okay, 11, you see, divided by 0.618. 79. So 18 is the next one, you see. And it's where we came. What is the one after? Divided by 0.618. 29. Yeah, look at this. So 18 and 29. Yeah, and after 29, I closed it. Okay, it's okay. Calculator, 29 as 0.618. 46, 47. You can imagine how close that is to the high, right? You can see how close that is to the high. So this is the scale that we have to use to get the right Fibos. Either way, what I'm saying is I've got an extended wave 3, okay, and you've got a move that obviously in terms of values does not make sense for that to be a wave 1, but more like a wave 3 and a 4. If you place your 1 here, what you do have is you do have a very short wave 1 here and a very short wave 2. So you would be looking to do this, you see, which one way or another, you know, because obviously we are here at 61 and at the 0, it pretty much comes at the same level, but the extension is much bigger, although it doesn't seem like it's the case. But if we turn this to log, you will see the difference. So I am not particularly interested in looking at this as that. This is my count. 1 and 2. Okay? And these are the levels that I'm looking. Okay? And they already actually come through. Now obviously there is one higher that you can calculate that yourself. Now, done with this, and I think it's time to go a bit closer. Usually wave 4 corrects 38.2 of the wave 3. Okay, that is down around 22k. I just wanted to mention that, so you have that in mind. This is very close to the base channel, the top line. Now, since we are still in an accelerated sort of move, okay, that even if we use the Fibos over here, you know, we might find some confluence. We can either log it or unlog it. 76,298 with a log, and we're going to use a 4236 4618. I think we are on next one would be 6 or something. Yeah, around 6. So you can calculate all these levels for yourself, you see. So they do make sense always. If you get a cluster between a log and a non-log version, it's good. If you get a cluster between a Fibonacci retracement and a Fibonacci extension, that's good as well. So let's look at that. Where do we go? 32. You see, there is some sort of cluster here, and there is some sort of cluster here around 2150, 2250 as well, right? Either way, I think we're wasting time. What am I saying is this: wave 4 might not be done yet. Why? Because we did not have a confirmed break above the previous high. It's not confirmed. You can say whatever you think, but it's not confirmed. What I want to do now, obviously, since we are still in an accelerated move indeed, go and measure. Use a channel, accelerated channel. Ideally, that should be down in 2. But since we have not done a fresh low below that level, we assume for now that might be the 4. So if that might be the 4 indeed, or because it is a swing low indeed, we are finding resistance over here. We're finding resistance over here and over here. This is the sort of, you know, shoulder that I never liked, by the way. And we also find resistor about this around this area, which is the previous high of this drop. So what are the expected scenarios? As I said last time, wave A, you know, it's not in my repertorium any longer. Why? Because it cannot be an A, because we crossed above. So it can be an A, B, and a C. Okay, and that can be a W, that can be an X, and we can get a Y. Okay, and that wave Y, if this is an expanding flat and this is like a zigzag, you know, it can be anything. This wave Y, it can be a flat, it can be a triangle, it can be zigzag, but it cannot be an impulse. Okay. So WX and Y, which is a double 3, is one of the scenarios. The other scenario is a flat, which is A, B, and C. Do note that wave B and wave X can literally go into the same false break territory. Okay, they have the same characteristics, wave B and wave X, when WX and Y is a double 3 and not a double zigzag, which is the case here, as we've just seen. So this is coming as a second scenario, but not as the second alternative. It's like an alternative to the two scenarios that I'm 50-50 with, and this is not the two. This is going a bit further down the line. Why? Because if that was an A, it means that it's a flat. This is indeed a WX and Y. Okay, this is indeed an ABC. Yeah, and this is going to be 1, 2, 3, 4, and 5. So the last wave to the downside is the one that is going to change what we get when it finalizes, but I don't think it's going to be a 5-wave impulse. And why a 5-wave impulse here can happen is because a flat is an ABC, ABC 1, 2, 3, 4, 5. But it goes back on my repertorium. Why? Because it's very, 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 very rare that we're going to see a flat pattern that its first wave A is a flat. It's very, 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 very rare. Okay. Now, what is the other scenario that I'm 50-50 between with the first one I just showed you? Well, it is that my wave 4 finished here. And this is 1 and 2. And this is 3 and 4. And this is 5. Is this something that is possible? Well, I want you to look at the volumes and tell me if it reminds you something that we just talked about for the larger cycle. Because to me, it doesn't. Okay. Now, if this is indeed a 5-wave move, yeah, there is two scenarios. One is very risky, and the other one is less risky. What is the very risky scenario is that the bull run is over. Why? Because we had 5 waves up, we had a fresh high above the previous high, even a false break, and literally that makes the 5th wave complete. So theoretically and practically so far, this is finished, and it means we're going to go all the way down because my 5 is done, and my 5 is done, and that is going to be a very, very, very big drop to the downside. Okay. The other one, because that one also supports the volume situation a bit more, because we wouldn't want to see that being a wave 3 of, you know, it's a funny wave 3, there's no volumes here. We prefer that to be a wave 1. Okay. So if that is a wave 1, what means that? That means that it's going to get a 2, 3, 4, and 5, and we're going to extend. We're going to have an extended wave 5. Okay. What does this extended wave 5 mean? Well, wave 5, first of all, can be equal to wave 1. So if that was the case, I have to take this thing and move it all the way up and make it equal to wave 4. So if my wave 4 finished down here, it means that we can go all the way up to 125K. Okay, that will be 1, 2, 3, 4, and 5. But then if wave 1, and hear me out, is this, then your wave 3 must go above the actual rule of equality, the guideline of equality between waves 1 and 5. Okay. So if my wave 3 is going to go up to 128, well, that's not going to be a case, which means what usually happens when they measure the move, when this rule of quality is not applying, is that you're going to get an extended 5, which in this case might be the scenario if we, of course, get a validation to the upside. So 120K will be 125 will be the wave 3, and then we get wave 4, and then wave 5 is going to get to around 166 and perhaps even higher. Okay, but assuming we only have wave 1 over here, obviously when we're going to go higher, we'll have 3 and 4. It's going to be much easier to calculate the target. Now the other guideline we can use is that my wave 5 is equal to wave 4. That is that. That is going to bring us to around 150. Okay, that makes a bit more sense, because if we just pull again this tool out and we look at the expansion of wave 3, it gets us to 130, and then the 200 gets to around 43, the 261 around 167, you know, and then obviously if this is indeed my 1, you know, and my 3 comes and ends around 129, well, obviously you know that that's going to get us around the 300, so it doesn't make much sense. So what I'm saying is that we're trying to find Fibonacci clusters that make sense, and this is how you can approach the market. It's all about probability. So the better combinations that one uses, the more chances of getting an accurate sort of scenario playing out that makes sense, of course, right? So what I'm trying to say here is that this, if this is my 1, and my 1 is going to be equal to my 5, and then I'm going to end my 3 around 129, then my 5 is going to get around to 300K, which means we'll have an extended 5 in an extended 5 wave. This is the most optimistic scenario you're going to see. Okay, so I think that gives you a lot of information to work on at home. Now, what I am going to do here in the short term, though, because we have a short term pattern, right? I'm going to go a little bit lower down, and I'm going to tell you what it's really that thing that makes me think that well, we might have finished, yeah, and we might have not finished. Finished because we have a 5-wave leg to the upside, and we got a false break above the channel and above the previous all-time high, and we do get increase in volumes down here, which means that can be a wave 3, and that can be indeed a wave 1. No volumes in wave 2, which is correction, which is correct, and very big volumes in wave 3. But now we see that correction coming in. So what really is happening over here? First of all, 1, 2, yeah, 3, 4, and 5. You might say, are we done up here? What if we had 1, 2, that is 3, 4, and 5? Well, this is possible as well, but I will tell you what, because we have an extended wave in here, okay, and it's very likely to be the wave 3, the best thing to do, okay, is to, first of all, you understand 5 waves up mean progress is impulsive. This is what we see, but because there is an extended wave internally, our wave count goes up to 9 waves. Okay, so what I did, I counted 9 waves, and these waves, 9 waves come up here because you got 1 and 2, yeah, and then you get 3, 4, 5, 6, 7, 8, 9, right? They are fairly clear, these 9 waves to me. When we have 9 waves, it means that we had an extended wave, okay, and that is it. That is it. Now, unless if I repeat, we're going to get an extended 5th as well, it means we're going to have 9 and then 13 waves, right, or 14. So we're going to get another 5-wave move to the upside. Can that happen? Yes, it can happen. But I will tell you first what I'm looking at as the most likely probability in the short term, and then I'm going to tell you about the upside. Okay, so 1, 2, 3, 4, 5. Yeah? That's what I see. 1, 2, 3, 4, 5 is one of the scenarios. Okay, and that still makes sense because that is a wave C of a wave B. Still a wave C, which is impulsive. So you got 1. We're expecting a expanded or even running flat over here, okay, because we still don't know how deep we're going to get. And then we'll get 3, 4, and 5, okay, and that can be wave A or it can be wave 1, which means we're going to get B or 2 and C or 3, 4, 5, which is obviously much deeper decline. Scenario number 2, short term. A, B, C. We have high volumes because this is support volumes. And we're moving up impulsively. We're going to get a 5-wave move to the upside. That's going to be my 1, my 2, my 3, my 4, and my 5. And we're going to end when we see a 5-wave move to the upside. And again, we can use wave 1 and plug it all the way up to find a projection level. We can use wave 4 and plug it all the way on top over here, and then assume another projection level for wave 5. Or we can use the 1 through 4 and look at 38.2, 61.8, and then as it goes up, 68.39, 75.95, which is 75k. Then you got the 85k, and you know it goes and goes and goes for the 5th wave. What I'm looking over here from a traditional perspective as well is that we have an amazing head and shoulders. You see this? Which I spotted in my group days ago, before it even happened actually. We're up here. So we've got left shoulder, head, right shoulder, breakout, confirmation, invalidation of the confirmation, and maybe we'll continue lower down, or maybe we'll continue higher. So we are in a moment where this price action is going to determine the medium term. Okay? So if we move past, and since we are doing this that way, there, 61.8, the chances to move higher are going to increase. If we don't move past 61.8 or 64k, then the chances will remain with the downside. Okay. Since we're here, we also have to put up a channel, right, over here, and look for a short-term rejection. So if this channel holds, then there is very likely that this channel is going to create a guide to the downside, right? But if we break above, as I said, we'll look at the channel of this particular neckline. We can call it like neckline channel if you want, which means the increases of moving higher past that are going to increase as well. And there might be a failed head and shoulders. Okay, now if this is indeed a head and shoulders, what can we get to? Well, we're going to go and measure that last leg and get at the 61.8. It's around 48k. Okay, this is when usually head and shoulders correct and then continue, because head and shoulders, most of them will tell you that it is a reversal pattern, but this is wrong. This is a continuation pattern. Now, unless if we go and we assume that this head and shoulder is part of this leg, because it could be, it still belongs to the same degree, right? We might even go down to 40k. Now here's the risky situation. If we break 40, 41, 50, the chances of moving lower are going to increase, okay? Which means the chances of having a wave 4 here are going to increase, okay? If we were to assume this as 1, 2, 3, 4, and 5 as well, right, we might get a correction. We don't want to move below this wave 4, okay, because this is 1 and 2, this is 3 and 4. We don't want to move below that level, the 40k, okay? But again, I will repeat that we prefer to stay above the 41.50, okay? Now, is there anything else to mention here? Well, it will make sense to perhaps draw another channel here from 3 all the way up to that level and go down to the last low, and then move all the way up and look at the fact that we are still outside this channel. Okay, you might say, what does this mean? Well, it means that we are not accelerating any longer. The acceleration of this trend is finished the moment we exited that channel. Okay, now we do indeed see a correction, and as I said before, should this be 3, 4, 5, A, B, C, well, might be a we might get a correction up to 62.21. If that's the case, then most likely that's going to be a running flat. If we get past that and above 63.64, 63, that's most likely be an extended flat, or there might just be no flat at all. And this is just an ABC. We finished, and we're going to continue higher. Okay, and I already gave you the probabilities of that if we break above the previous high. Okay, it means that we got 5. Hold on, we've got 5 waves up. That's a very shallow correction. We're going to move all the way up to continue in 3, 4, and 5. Or it means that we're still doing 1, 2, 3, 4, and that's to be the 5th one. It means that then they're going to crash, because that's going to be 1, 2, 3, 4, and 5. So you can understand the situation. It will have to adapt to what the market gives us on a daily basis, and this is how it works. Now I'm going to go quickly on SHIBA, as quickly as I can. First of all, I want to tell you that this button is very important, guys, for some people to understand that Elliott waves can cover anything and log charts can cover anything. Anything that moves over 20% on a very frequent basis has to go on a log chart, okay? I don't have a problem for those who don't use the non-log chart, but if you don't, it means that you probably don't know why it's used. So Elliott waves can cover anything, just so that you know. SHIBA. Before we go in that, and I want to tell you that there is another wave that comes from down there, which is a 5-wave leg to the upside. This is just the first move that starts, and it's the first OKX. It was the first to trade Shiba Inu against Ethereum, and that was back on May 21st. But Shiba Inu obviously has a bit longer history, but all that is a leg to the upside up here. So that is the wave 1, okay? And the wave 2 is down here, yeah? And the wave 3, and the wave 4, and the wave 5. Or, because we're at the moment where it's not clear, I also have labeled it as A, B, and C, because we indeed not know. We have 3 waves so far. Okay, when we have 3 waves, we need to ensure that the 4th wave, when it comes down, it doesn't go past into the territory of wave 1, which means that we're going to put that over here, and we don't want that to ever break, okay, if we want to continue higher. Okay, now obviously that is in the wave 3 of the same degree. So we're looking at the yellow. The yellow is minor degree. We don't want yellow 4 to come back there. Now what is happening though internally, okay, is that we had a very big correction down here in wave 2. Yeah, and what happened since then is that we have this weird structure over here. Okay, this structure to me does not look like it's a 5-wave move to the upside if you combine the two. So that's why I split it into 2, 1 and 2, 1 and 2, which means we have 3 and 4 and 5. Okay, regardless of whether we are in C or 3, by the way, right? Not you. Which means that we have a 3-wave here, and we expect wave 4, and this is when we're going to end up in 3. Yeah, and then the 4, and then the C or the 5. Okay, so let me clear this a bit further. If this is A, B, and C, or 1, 2, 3, 4, and 5, we have not yet finished with the move to the upside, most likely, let me add. Why? Because this is a wave 3 clearly on the volumes, and this is a 4 has more volumes because we expect another leg up. So these volumes are supportive, and the volumes over here increase, but they increase where? On the move up, which is the wave 3, and also the increase to the downside in this particular volume here, which is a declining move, okay, which means an internal structure has terminated. So right now, what I'm seeing and what I think will happen is that we're gonna get, okay, that's done. We're gonna get the 4, okay, and then we're gonna get the 5. Okay, 3, 4, and 5. So that can be here as well, and that can be here as well. And then this in the 5 and the 5. Yeah. So for now, 1, 2, hold on, let me see that. No, this should be here, and this should be here, and the 4 should be here. So we have corrected down in wave 4, a sharp correction which is expected in 4. And now what we see another leg up. Okay, and as I said before, I do expect that to give us either wave C or wave 3. If, as you can understand, this is a wave 3, we're going to get 4 and then 5. If it is a wave C, we're going to stop here and we're going to drop. Probably you're going to drop there. And this level is going to be our level where we understand whether we are in C or in 4, unfortunately. So if we start moving lower down and we stop here and we move up, this is a wave 4. You can break past that level, of course. But if we start moving lower down, then we come back up and then we move lower again. Well, without breaking the previous high, we do not have any clarity. And to be fair, the correction over here lasted quite a bit, so I wouldn't be surprised if this stayed here for a while either. But at the current state that we are in the markets, and of course that is going to depend on BTC as well, if we are indeed going to be turning into an alt season, which we haven't yet really seen it taking effect, because we haven't. This is not the usual alt season, guys. You see bumps and dumps. This is not an alt season. Yeah, everybody is waiting to see BTC, and I think everybody is waiting for the month to close. Okay, we have a lot of expiration of options tomorrow and other derivative products, so it's going to be an important day tomorrow. Okay, either way, the C and the 4 and the 5. Okay, where can wave 4 go down to? We're going to go and measure 2. Excuse me. And we're going to assume as the first level 13.2. Okay, that would be a decent correction. We nearly got that, so I wouldn't be surprised if this is indeed the 4. We're going to get 3 of C up here. Now, as you can see, I have used this extension tool from 1 to B, from 1 to 2, or A to B, whatever you want to call it. And we do have some very nice levels over here playing out quite well, right? Look at this, 1272 gave me rejection, 1061 gave me rejection initially. The next level up is what? 0.01 cent. Okay, this is the next level up. Can this be confirmed with a cluster? Let's see. We have to go to the internal structure and look at the gray minute. We are now assuming that wave 4 is done. Okay, we are assuming it's done. Look at this level. The 13.2 is exactly where we stopped. So next level up would be what? Again, the 0.01 cent. I mean, there is some decimals here, some decimal numbers that, you know, you can probably get it like in an hour or something. But this is a good cluster for me. It looks like a good cluster. Now, can we use another FIBO to get another cluster? Of course we can. And this time we're going to go in the internal structure. In the internal structure, we're going to use what exactly? Can we use 3 and 4? We can use 3 and 4 over here, the triangle, to see whether we finished at a significant level up here in 5. And we actually did. You see, that came right here. So this is a cluster zone. And then the next level up again, look where it comes to 0.01 cents, 25, 51, and 91. This is a big zone. And to me, according to the analysis we just made, that is a very likely scenario to take place. Okay, so another leg up, it's possible. Now, can we use a channel here to see what we can expect from a sort of guide perspective in the markets and the slope of the trend? Yes, we are going to connect wave 1 and 3, and we're going to take this down, or we can take it down to wave 4 or wave 2. For now, let's go to wave 4 and let's see what's really happening over here. And I will tell you something. I will give you here a hint. Okay, this is an acceleration channel in this degree, in the blue degree. Okay, an acceleration channel. And as long as we are outside this channel on the top side, obviously, remain bullish. Okay, we remain bullish as long as we're up below. If we come down, but we still are above this median line, we remain biased to the upside. Okay. Now, if we go the way down and come down here, we still remain biased to the upside, but we are like, you know, we have to be cautious, because if we break below that channel, then we get into the decelerating part of the trend, which means we are very likely to see prices really going down for a test of this 39.34, which is a very critical level. I'm going to repeat. Okay. What else we can do, because we're looking at the internal channel now, we can go and draw 1, 2, 3, assuming 3 finished, and go and all the way down to 4, assuming again 4 finished. And this is what we're going to get. We get a very close trend line over here. This is a zone for me, okay, that is going to tell us fairly soon whether this trend acceleration is going to start losing steam, okay, and it might be the case, to be honest, okay. On a different note, we can still take that oops, excuse me, we can still use wave 2 instead over here. Let me check, make sure that I grab the right thing. There we go. Wave 2 is down here. Then look, we are barely still within that. Okay, so we talked about the levels, we talked about the potential scenarios. It's pretty much only two. We either go up or for another leg up and then drop, or we're going to go up for one more leg, then one correction down. As long as 39.18 holds, we're moving back up. Okay, which one is going to play out, I do not know, but that's why I've been repeating. Pay close attention to the market, put down these levels on your charts, yeah, and then the ball is in your field. This will be all. I hope you did enjoy this video, although long, more like of a webinar. In case you want more of these analysis for more than, I would say, 50, maybe even around 100 different charts that I'm going through on a monthly basis, or on a daily basis. Probably I'm looking around, I would say, 4 videos, average about 5, probably around 15 assets on a daily basis. And we try to identify the best the highest probability scenarios. Yeah, if you are up for that, then give me a shout. My information, contact information on YouTube about section, and we take it from there. More than happy to give you a trial. More than happy to give you a hand. So take care and trade safe.